In this presentation, we will discuss Section 179 deduction and bonus depreciation related to small businesses, self-employed businesses, Schedule C type businesses in general. When we consider the 179 deduction and bonus depreciation, we're really talking about those larger type of assets, typically depreciable type assets, those assets that we put on the books as an asset when we purchase them and not expense them when we purchase them. For example, if we're talking about the forklift here, we purchased the forklift even if we paid cash for it. We don't typically write it off in the first year under normal depreciation. Under normal depreciation, we put it on the books as an asset, and then we depreciate it over its useful life. From a financial statement standpoint, that makes the most sense because then we're going to allocate the cost to when we use it. Now, when we think about the tax code, we have different types of incentives. We already have a different kind of depreciation method, Maker's method, as opposed to possibly just a normal double declining balance method or straight line for financial statements. But they might want to incentivize more growth in the economy or try to stimulate the economy, the government, by giving more of an expense in year one of the cost. So if we bought something like a forklift, then they might say, hey, let's give an added bonus and allow us, in essence, to deduct more of the cost of that forklift in the first year. So that would be kind of like just being able to depreciate more of it in the first year. We can think of it rather than having to allocate that cost of purchase over the lifetime. And so both of these things will do that. The 179 deduction is designed to take more of the cost of the forklift, be able to deduct it in year one rather than allocating it over the life of when the forklift is used, and in so doing, possibly stimulate the economy to have more people buy more things like forklifts, more large type items, hopefully stimulating the economy. Bonus depreciation, similar concept. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So that means that we're going to be able to depreciate more in the year of purchase. In 2017, there is a cap of 510,000. In 2018, we've got the 1 million. So we've got the increase in the amount of 179 deduction that can be taken. 179 deduction cannot be used to create a net operating loss, however. So when considering, we're thinking, okay, should we buy more large equipment at the end of the year? Oftentimes we think about it at the end of the year because of someone's going to say, how can I maximize this benefit? Well, if you buy it at the end of the year, possibly you're going to get, a whole, all the depreciation for multiple years that you would typically have to depreciate something over at that point in time, possibly. So a lot of times some planning would be to then purchase large pieces of equipment. Now, there's going to be limitations possibly to when we purchase the equipment, as well as dollar limitations on how much we can have purchased in order to deduct for the 179. And we also have to note that if we have a loss, then the 179 deduction can't be used in order to take a loss. So if we were going to lose money on our Schedule C, if we had a net loss due to the 179, if we had a net loss not due to the 179, then the IRS is saying you're going to take that and write it off against other income, like W-2 income. And we're not going to allow you to do that with the 179 deduction, which is kind of a special bonus deduction. So you can have it, but you can't take your net income below to where you have a net operating loss, which might benefit you by writing it off against other types of income possibly. So the 179 deduction must be used in an active trade or business. So when we're thinking about 179 deduction, it's got to be, of course, in the active trade or business in order to get the benefit from it. Cannot create a net operating loss. So obviously, once again, can't have a net operating loss from the 179 deduction. It's going to be limited in that case. Property cannot be acquired from related party or by gift or inheritance. So if we've got the property that's going to be depreciated and have the 179 related to it, it can't be from a related party or by a gift or inheritance in order for the 179 to be applicable. If there was a trade-in, then the 179 expense is limited to the cash paid for the property. So if we have a situation that there was a trade-in, we have a limit to the 179 portion of the deduction. Then we also have bonus depreciation, which is another basically incentivizing transaction, similar kind of concept to be able to take more of the depreciation in the first year. So we're going to have the 100% bonus depreciation, which is huge. So we can fully deduct the cost with no limits other than luxury auto limits in many cases. So this will actually reduce the need or the significance of the 179 deduction in many cases, because the bonus we'll get full deduction in terms of the bonus depreciation at this point. Similar concepts with the 179, however, the idea is typically being to stimulate the economy, to have more depreciation that's going to be in the beginning, and hopefully have more purchase of equipment for that purpose. Partial business use. What if an asset is used partially for business and partially for personal use? Common example of this would obviously be an automobile. We might have the automobile that we use both for business and both for personal. What do we do in those cases? If property is used less than 50% for business, Section 179 deduction is not allowed. So if we're thinking about property that is not, over half used for business, if it's less than half used, then we can't have the 179 deduction. For more accounting information and accounting courses, visit our website at accountinginstruction.info.